business with the best in the industry. Do business with the Davis Realty. Do business with the best in the industry.
Welcome to another episode of the Don Davis Real Estate Show. It's your host, Don Davis of DDLRG, brokered by EXP. In the beginning was the Word, and the Word was God, and the Word was with God. Upon that rock, He built His church. Upon that rock, we've built our business. And our results are a reflection of our character. If you'd like to evaluate our results, feel free to go on to HAR Platinum, Redfin, HAR Platinum, Facebook, and Zillow, and several other sources, and you can see exactly how we do business. We do business based on the Word, and that way we can take care of one customer and the referrals keep coming. I'm excited to be temporarily out of quarantine, but still staying safe. I have the opportunity to have one of the top loan officers in the country in the studio today, none other than Dwayne Graham of New American Funding. How you doing today, Dwayne?
Pretty good, Don. Pretty good. Appreciate you having me.
Good, man. I was excited to get you on. I know you're extremely busy in this during this COVID-19 pandemic, yes. And I see that some people have not adjusted, but some people have. Give me an example of what you've seen in the market as far as adjustments. How is business being done as a lender in the pandemic versus prior to the pandemic?
Sure. So the pandemic has caused a lot of uncertainty. With the uncertainty, it came with a lot of changes. So some of the changes that we've implemented is we've gone up a little bit on credit score requirements. So before we could go down to a 580 credit score, now we're at minimum 620. That's pretty much that's the main change that has happened with us. We're still in the business of lending money. We're still in the business of, helping people achieve the dream of home ownership. That's the goal. It's to get somebody in their home. So with us, we've adjusted based on the current conditions, but it's not anything crazy. I'm hearing some really, really crazy stories about some of the things that some other lenders are doing, and it's shocking. It's shocking.
And that's very important. You have to have somebody who's going to maintain their composure in a time like this. Yes. And so I lead with that because, me, I don't just have anybody on our real estate show. I look for seasoned professionals. Tell the audience a little bit about your background, how you work for a larger firm and how you transition into working to New American Funding, yes. And what makes it so much different about you guys that some of the big box lenders don't have the capabilities of doing.
Sure. Let me start with a little bit about myself. So I'm actually originally from Jamaica.
Okay.
Came here when I was 19.
Yes.
Like most Jamaicans, when we come here, we have multiple jobs, right?
Yeah.
So came here.
How many jobs, man?
Yeah, right, man. So came here when I was 19. At 21, I purchased my first house. So young kid, nice. Working 3 jobs, Jamaican. Going to school, and at the time I was taking care of my little sister. So, young kid, purchasing my first home. I know nothing about real estate. I know nothing about mortgages. I'm just a young kid who's happy to be purchasing his first home. So, at the time, the common practice was to get everybody, the common practice for the loan officer was to get everybody in an arm, have them stay in the house for 2 or 3 years. Yes. Then you refinance them. That way you get 2 deals out of them.
Exactly.
Yes.
He's telling the truth to you guys. Yeah. Everybody out there in the radio industry, I hope y'all are listening to how loan officers prior to the the new regulations, they used to get 2 deals out of every person by putting them in an adjustable rate mortgage first.
Yeah. So the problem with that is my rate adjusted, and it adjusted right at the time of the crash.
Wow.
Yeah. So again, young kid in school, working 3 jobs, taking care of my sister. My mortgage went from, I want to say 700 to 13.
Wow.
Yes. And at the time, my best friend is like, hey, I'm thinking about going into real estate. I'm thinking about becoming a realtor. You should look into being a loan officer.
Okay.
I'm like, all right, that's fine. It's not like I'm busy already. I'm in school. I'm working 3 jobs. So I'm like, all right, that's
just
fine.
Add that to the plate.
I know, right? So I'm like, all right, that's fine. Let me look into it. So looked into it. Got licensed. The first deal that I did was actually my refinance.
Okay, you did your own. Okay.
Yes. So that's the first loan that I did. I share that story to let people know that I understand the thought process of being on that side.
Exactly.
And I understand the thought process of being on the side of the loan officer.
And I actually appreciate that you didn't just go out and practice on someone else. You know.
Yes.
You know what I mean?
If I mess it up, I mess up
exactly.
mine.
You know,
the first one.
You go to these barbers and they say, "Okay, let me cut your hair." No. Have you ever cut hair before? So have you actually practiced on yourself?
Yes.
You're able to get that payment. You knocked that payment down from
Knocked that payment down from $1,300 back down to less than what it was before. I think it went down to like $650.
Awesome.
Yes. So again, I share that story to let everybody know that I've been on the side of the person who needs to get the help.
Yes.
And I've been on the side of the person who's giving the help.
Awesome.
So I've been a mortgage loan officer for about 15 years now.
15?
Yes.
Wow.
So I've seen it all.
Nice.
Yes.
So with 15 years in the business, when something like this happens, a Hurricane Harvey, a Hurricane Ike, a pandemic, how do you say, "Oh, I'm putting my resume out there, I'm going to look for a new career," or do you restructure your strategy on how you do business?
Restructure strategy, how we do business. How we look at it is we're in the business of helping people. We're in the business of helping people buy homes. Someone's always going to need a place to live. So our job is to help facilitate their need.
Exactly.
Yeah.
So help facilitate their needs by putting the client first and take care of their real estate needs despite what's going on in the economy, in the global economy, in the local economy, and just showing them that, hey, you have somebody you can rely on in a time like this. We're going to go ahead and go to our first break once again. Live here in the studio, guest Dwayne Graham of New American Funding. Keep in mind, love where you live, love where you work. DDLRG, love's going to get you. I am Don Davis of DDLRG Luxury International Real Estate, and when it's time to make a business decision about your residence, please keep in mind, it's a Don deal.
You want to excel, Don Davis is a great guy to work for. I mean, he's a great teacher and a great leader.
He's more than family. He's the guy that's actually helping me roll. I didn't know anybody when I moved out here. He's the guy rolling his sleeves up saying, "Come on, let's go move what you got to move."
When it's time to make a business decision about your residence, it's a Don deal. People keep asking me, how are rates in the pandemic based on what you've seen in the past? Speak on that a little bit.
So I can tell you that in my professional experience, I've never seen the rates this low. Ever.
Wow.
Yeah.
In 15 years?
15 years.
15 years, you've never seen rates this low.
Never seen rates this low. I tell everybody, because of the uncertainty, there isn't a way to know if the rates are going to keep going down, if they're going to stay where they are, or if they're going to keep going, or if they're going to go back up.
Exactly.
If you are thinking about purchasing and you've talked to your loan officer's offered you a certain rate. If you're good with the rate, you're good with the payment, don't worry about it, just lock it, move forward. Because the rates go up faster than they come down.
Okay, so you say go ahead and lock it and move forward. A lot of my clients ask me, Don, should I lock it? Don, should I lock it? Tell me this. What does it cost normally to lock a rate? What does it cost normally to buy a rate down? Mm-hmm. And when do you decide that there's a chance that the rate might go up? Have you ever, because clients want to hear that, you know, sometimes people say you're overinsured when you get car insurance and things like that. Yeah. Sometimes clients want to know, did I really need to lock that rate or was it going to be steady? What is the cost for that? How often have you seen that backfire on somebody for not locking and things like that?
So with us, and I think with most lenders, there's no cost for locking. It's just you saying to your client or you saying to the loan officer, hey, that's the rate as of today. All right, I'm good with it. Mm-hmm. Or you can say, you know what? I want to take a chance. I want to gamble a little bit. Let's see what the rates look like tomorrow, and just go ahead and let it float. Now, with floating, literally, the only difference is you say you're starting the process, but you're not locking in the interest rate. That's literally the only difference. Okay, so there are small changes in how the rates work. So if the rates go up, they might go up by a quarter. If they come down, they might come down by an eighth.
Correct.
Now, the difference in your monthly payment with it going down potentially, just unlike a $200,000 house, is probably about maybe $15.
Correct.
Maybe.
Correct.
So you might end up paying $30 to try to save $15 if it goes up a quarter versus going down an eighth.
Okay.
Yeah.
Okay.
So I tell everybody, again, if you talk to your loan officer, you're good with the rate, you're good with the monthly payment, don't worry about the rate. pay more attention to the payment than the rate. Because if the rates go down, it's going to go down by maybe an eighth.
Okay.
And is the eighth worth it? If you think it's worth it, then, by all means.
So what's your advice on if you're able to do a 15-year versus a 30-year and things like that? I know I have a client that's been quoted some pretty strong rates by the big banks on the 15-year lately. What is your what DTIs do y'all look for on a 15-year mortgage?
So for us, if it's a FHA loan, we can go up to 56.99%. If it's conventional, we can go up to 49.99%.
Audience, I'm going to translate that to y'all. That means call him today. That means call him today. In layman terms, that means call him today.
Don't try to calculate your own DTI.
Yeah, that means basically what he just said is about front end and back end ratios, depending upon how much active debt you have versus your actual income, that they're able to tolerate a lot more than your traditional bank as far as debt. However, keep in mind, they're going to make sure they're putting you in a position to succeed.
Yes.
So they're going to make sure that even though they're allowing a little bit more debt, they're going to make sure that your funds are seasoned,
yes,
your employment is strong,
yes,
and things like that. Speaking of that, I know that's what we're running into in the pandemic. It's people losing their jobs right before closing. Explain to me, how many times do y'all do a verification of employment, verification of rent, things like that? The underwriting process, clearing conditions.
Yes.
What does the general public need to know about what's going on behind the scenes when their loan is being approved?
Yes. So there are a ton of verifications that happen behind the scene without you even knowing. We verify income. Yes, income is literally verified at least 3 times. So you're giving your pay stub, right? You're giving your tax returns, right?
Yes.
You're giving your W-2, right?
Yes.
The lender still is going to verify everything.
Wow.
Yes. So the lender is going to reach out to your employer to get what's known as a verification of employment. It's going to show your position, when you started, what your year-to-date income is, what your previous year's income was. There are a lot of verifications that happen in the background without the client, without the borrower even knowing. And before we close, one more verification, just to confirm that you're still there.
To make sure that you're still there.
Yes.
So people think, I'm under contract, I'm buying a house, this builder's picking on me, they're asking for too many things. They just want to know that you can afford the home, and they want to verify, because they are lending you over 6 figures for the next 30 years. And it'd be really good if they actually evaluate the application. So I have no problem with that, as long as you are truthful on the 10003.
Yes.
Then I don't think we'll have a problem. So we're going to go ahead and go to our next break. Once again, live in the studio, Dwayne Graham of New American Funding. Love where you live, love where you work, love your loan officer, DDLRG. I am Don Davis of DDLRG Luxury International Real Estate, and when it's time to make a business decision about your residence, please keep in mind, it's a Don deal.
Not only do we take care of our clients and our communities, we also are well kept here at DDLRG.
When it's time to make a business decision about your residence, it's a Don deal. We're back. Don Davis Luxury Realty Group, brokered by EXP, live in the studio in the COVID-19, showing you that love's gonna get you. Please wear your mask, stay safe. We're coming out the mask for the show. Want to make sure we give a shout out to Janelle Burst, WNBA champion. Janelle. Congratulations on your new home. And I also want to give a shout out to James Becker out of Sacramento, California, Fusion Growth Partners, making sure you guys stay safe out in California. Our real estate network reaches from coast to coast, so a lot of people don't realize by we being online and things like that, we have the ability to reach people in different areas of the country, and that way, if we have somebody relocating from one place to the next, we're able to service them as well. I also wanted to we talked about DTIs a little bit.
Yes.
A lot of people think sometimes it's better to transition into a condominium just because of the lower sales price that they see initially.
Yes.
However, they forget to calculate the association dues against that. Tell some of your experience on working with condos, what condos are approved, what condos are not, and what you've run into in that aspect, because you do condos as well,
we do,
right?
We do. So one thing about condos that most clients, whenever they're searching unfortunately they don't consider as the maintenance dues.
Correct.
I've seen condos where they're being sold for $100,000, but the maintenance dues are $995 a month.
Exactly.
Yes. So it's something that you do have to factor in. It's very, very important, because whenever the lender is looking at your entire financial picture, they look at the principal and interest, the taxes, the insurance, and any kind of HOA or maintenance dues. One other thing about condos is with condos, most condos have to be approved.
Yes.
What I mean by that is there's a criteria for the condo itself.
Occupancy.
Yes. So somebody could be approved for a loan, but then the condo isn't approved, and that causes issues.
Correct. The property itself is not approved.
Yes.
And that's very important. You know who else is very particular about that? I remember a subdivision that was being constructed by one of the major builders, and they built these inventory homes in a new floodplain. So when they built those new inventory homes in a new floodplain, VA would not fund homes in that area because those properties were not approved for VA loans.
Yes.
So you also want to make sure not only are you approved as a person, but the actual property that you're buying is improved for the lender to feel that it's worth lending the money for.
Absolutely.
And so that's where it's a marriage. I tell everybody, when you're buying a house, it's like getting married. You take a step, I take a step. You take a step, the inspector takes a step. You take a step, the appraiser takes a step. You take a step, the seller takes a step. And hopefully we get to the altar, which is the escrow company. We get to the altar and you say you may kiss the bride. That means you can sign the paperwork and kiss the bride, and then we go home and fund. Go home and have funding. You see what I'm saying? Go home and have some funding. So that's how I look at every transaction. But you got to have somebody that's experienced to help you understand how to navigate during the turbulence of the real estate transaction. And you and I went through some turbulence recently, but you could tell we were both experienced because everything that came up,
we had a solution for it.
Exactly. And speaking of that, because a lot of realtors watch this show as well, they say, Don, how do you choose a loan officer? Well, first of all, choose a loan officer that has a good relationship with an underwriter. You got to have a loan officer who the underwriter respects.
Yes.
If the underwriter doesn't respect the loan officer, your file doesn't have a chance. So give some history on how a New American Funding, how you work with underwriters.
Sure.
Because I notice you're very respectful of them, and then you present your information.
You have to be. So New American Funding's been in business since 2003. We do lending in every state except New York and Hawaii right now.
Yes.
We have, last count, I want to say 310 locations. We have 3,700 employees, and we do a little bit over $1.5 billion a month.
Wow.
That's with the B.
Per month.
Per month. Last month we did a little bit over 2.5. Yeah. Billion. Yes.
Wow.
And with us, when it comes to underwriting, we underwrite to DU and LP findings. What that means is whatever the system, majority of the lenders who lend, or majority of the lenders who do loans, they use a few systems that we all share.
Correct.
And those lenders will underwrite to those systems, but then they'll add their own guidelines. They'll add their own overlays.
Another layer.
Yes. With us, pretty much, we run it through the system approves it, that's it. The system says get one pay stub, get one W-2, don't worry about tax returns, that's it. So with us, we're a lot more nimble than most lenders. And one of the great things about us is we have direct contact with our underwriters. So I can reach out to the underwriter and I can say, Mr. Underwriter, here's what's going on with this file. Here's an accurate depiction of this person's financial situation. We don't think that they're a high-risk loan. Income's good, assets are good, credit's good. Even if they had some credit challenges, those credit challenges are in the past. What can we do to help them get into their home?
And that's so important. Nowadays, I get people reach out to me all the time and say, Don, I already tried to buy a house 2 years ago. I'm not trying anymore. I tried to do this, I tried to do that. You have to realize, when you go to buy a house, some people are trying to disqualify you, and some people are trying to qualify you.
Yes.
One thing I can tell you about Dwayne and New American Funding is they're trying to qualify you. They're not trying to disqualify you. And you need to partner with an agent and a loan officer who actually understands the importance of qualifying, not disqualifying. Disqualifying means I have so many applications coming in, I'm going to cherry pick. I'm not going to work on these. I'm not going to work on those. However, when you're called to do this business, like I said, we broadcast on 100.7 The Word FM because we know we were called to help people in the real estate business. This is my pulpit. Real estate business is my platform to help people achieve the American dream of home ownership. And when I say that, I know Dwayne, 15 years in the business, from Jamaica, came with 3 jobs. Now he only has one job, right?
Just the one.
Now he came from Jamaica down to one job that he likes. But one thing about that is he works it like it is 3 jobs. So he understands if you don't qualify, how can I qualify you? Yes. And that's very important that you connect yourself with somebody like that. How can people get a hold of you? We got about 3 minutes left. We're going to go to a break, but I want to know, how can people get a hold of you? Because I know you strike their attention when you said you didn't have to have tax returns on one of your products.
Yes.
Keep in mind, we'll go ahead and list a few products you have, and then how can we get a hold of you?
Sure. So we do everything. So we do FHA, VA, USDA, conventional, jumbo, bank statements, you name it, we do it. The only ones that we don't do right now is we don't do land loans. We don't do lot loans.
Exactly.
But outside of that, we do everything else. And again, we underwrite to the DULP finding. So whatever the system says, that's what we get. If anyone wants to contact me, feel free to reach out to me on my cell. Number is 832-661-9060. Again, 832-661-9060, or by email. My email address is dwayne.graham@nafinc.com. So it's dwayne.graham@nafinc.com.
And I'm glad you were able to share with us. Like I said, he is a big source for lending when it comes to asking questions, being educated on what goes on behind the scenes. And because you're a branch manager too, right?
Yes.
Branch manager. It's very important that you deal with branch manager. I'm a broker, branch manager. You definitely want to deal with people who not only help you, but so you have loan officers under you.
Yes.
You got to have people with experience, and that's important. You want to deal with the branch manager because, once again, the branch manager has the underwriter's attention. So be very careful who you choose as an LO, but at the same time, when you go with Dwayne Graham, I don't think you can go wrong. I want to give a shout out to all my sellers right now, real quickly. I want to talk about a few properties that we have listed for sale to show you that people are moving on the pandemic. And this one's not going to last long. This is in Grand Mission Estates. It's 7827 China Berry Sky Lane. That's 7827 China Berry Sky Lane. It's a 4-bedroom, 3.5-bath home, over 3,100 square feet on a corner lot on a lake view in the Grand Mission Estates right there in Richmond. A Lennar home where everything's included. You're really going to love this home. Well, you got to love it quick, though, because we already had 3 showings in 24 hours. So we will be getting an offer. That house is going for $340,000. Once again, over 3,100 square foot house, 10,000 square foot lot. Grand Mission Estate, 7827 China Berry Sky Lane, available for sale on a lakefront property on a corner. And then, so like I said, that's not going to last long. So jump on. If you want to see it today, give us a call. The next one we have is 1406 Kirby Place. We were just talking about people already headed to Galveston. Well, guess what? This one is near NASA, Kemah Boardwalk, and everything you want to see as far as entertainment is right there in that area. I love Kirby Place. Kirby Place is a cute little subdivision. The house is over 3,500 square feet. It's actually 3,800 square feet, and it's 1406 Kirby Place. We're only asking $339 for it, so you're looking at $89 a square foot. $89 a square foot for a home like that, you can't beat it to be that close to NASA, Kemah Boardwalk, and all that activity over there. So go ahead and check out 1406 Kirby Place, Seabrook, Texas. You want to check that one out today as well. Just look on our website, viewallhoustonhomes.com, viewallhoustonhomes.com. Once again, it was a pleasure having Dwayne in the studio. Keep in mind, love where you live, love where you work. Love's going to get you. DDLRG.
Do business with the best in the industry. Do business with the Davis Realty. Do business with the best in the industry. Do business with the Davis Realty. Do business with the best in the industry. Do business with the Davis Realty. Do business with the best in the